Hi, I'm James. I'm your senior market analyst here at easy-forex. Today I'm giving you an update, and that update is on my old friend crude oil. Now, on the 7th of April, crude oil skyrocketed, actually increased by 6%. However, the following session, it dropped by 2%. So the question being asked is, what is the future of crude oil prices? There's two camps and two separate arguments. Let's start off with the bulls. And the bulls believe oil prices are going to go up. Their argument is as follows. First of all, Iranian oil. Now, there was a lot of fear that the Iran nuclear deal would go through. The market would be flooded by Iranian oil. However, many analysts are now saying you will not feel any physical impact on the market till 2016. So this is boosting oil prices. Plus, you have Saudi Arabia raising oil prices to what they sell to Asia. And you have unrest in Yemen. And you have more oil rigs closing down. And there's a hint of a US output slowdown. Now, how about the bears? The bears believe oil prices are going to drop. What there's argument? Well, starting off with, they believe fundamentals have not changed, meaning we have still too much supply. In fact, interesting story and interesting fact, there's a company called Genscape who collects data to release to the market before the government does. And they collect a lot of data on oil storage. In fact, it's very clever. What they do, very James Bond-like, is they fly helicopters over these oil storage facilities, and using lasers, they calculate how much oil are in these great big tankers. Now, what they are saying, there's a site called Cushing in the United States, a very large site. It's actually reached 70% of its capacity. The argument is when the capacity hits 100%, this will put a lot of pressure on oil prices. And moving and keeping with supply, you have Saudi Arabia increasing oil output by 10.3 million barrels. And you have non-OPEC members, Russia and Iraq, desperate to sell their oil. And the argument for the bears is no matter what you say, whenever the impact may happen, Iranian oil will flood the market, which leaves many analysts in this camp, like Goldman Sachs, saying actually oil prices could drop as low as $40 a barrel. As the time of filming, though, levels to watch is 53.66 resistance and 15.15 support. Other instruments to watch, keep a very close eye on Brent, that does follow crude oil, and be mindful on the Russian ruble. Russia will actually lose or suffer the most if this Iranian nuclear deal does in fact go through. And thinking out of the box here, keep an eye on the FTSE. Now, FTSE is being boosted at the moment because one of the companies in the FTSE 100, the Royal Shell Group, is actually buying an oil company called BG for $70 billion. And also BP, part of the FTSE 100, is also performing very well because of crude oil prices moving up slightly. If crude oil comes under pressure, watch the FTSE very closely. It could become very, very interesting. But like I say, it's not a trading recommendation or advice. I'm simply giving you an update. I'm James, the senior market analyst here at easy-forex. You trade safe.